Arun Thukral then from Axis Securities to chat about the market. Arun, hi, morning. Seems like after hitting that 11,400 mark, there seems to be that missed out feeling because 15 days back, no one thought that we're going to see such a strong March rally. Is it time then to profit take, would you say, or is it time to go on buying this rise?
Yeah, I think what we missed is the first 2 months where other Asian markets have rallied and we could not rally. And now this is obviously a pre-election rally, but there are other positive news, or I should say, let's say US-China trade war. Right now there are negotiations going on. So maybe no news is a good news. So that is what is also, and after whatever happened with our neighbor, and I think the market is factoring a victory for the current regime, so that is also a positive. And globally also, if you look at US Fed, they are pausing and not going to raise interest rate very soon. Even ECB is again talking about monetary easing and all that. So maybe the risk on sentiment has come back, and we are catching up as of now.
In that catch-up, Arun, one has seen banks take leadership. Do you think going forward as well, it would be banks, and would it continue to be the same horses, ICICI Bank, Axis or HDFC? Or do you believe that within banks as well, one could see a leadership churn?
So I think the major banks, earlier we were talking about the banks with retail focus. Now we are seeing banks with retail as well as corporate focus, and all major private banks obviously are benefiting. Corporate bank also benefiting more because of the NPA cycle is over, and they have obviously a good CASA franchise, and they have to catch up. The last 1 or 2 years they have not performed. So all in all, I think all these 2-3 top players will definitely benefit, and others also will follow. But we are very, very bullish on the private bank space, and within that the banks with retail as well as the corporate focus.
Let's also understand what you're making of the strength in the currency, and how do you believe that this is going to impact the IT sector? You know, we were talking to experts earlier this morning, and they're of the view that the IT companies which had projected for strong growth didn't really factor in the currency movement to their margins, which are already coming in under a bit of pressure.
Yeah, so earlier we were saying that after, let's say, consumption, the second best sector for us was IT and Pharma. Now the second best is shifted to the private banks, and now we are talking about the next level of that sector is now IT and Pharma, because of the same reason. Because the rupee has appreciated very fast, and it has come from, let's say, 72 to 69. And obviously there are a lot of FII flows coming. So maybe to that extent you are right. Yes, there are some some pressure on this thing. But I think looking at overall US economy and this global spend on IT, as well as the pharma is coming out of the woods, and there is no regulatory woes, pricing pressure has eased down. So those positive points are still with these two sectors. So obviously some pressure, but they will continue to perform maybe medium to long term. We are bullish.
Okay, that's the view coming in on the currency. But let's also understand where you stand when it comes to autos. Given the kind of disappointment that we've seen in the auto numbers, would you be very selective, perhaps stick with some of the two-wheelers, some of the outperformers within this space?
Actually, we are neutral as of now on auto and auto ancillaries, because obviously the last results which we have seen were off the expectations, and then the cost of raw material, and then the pain in the NBFC sector, that also is not helping any either. So that way not much is happening. Obviously there was a rate cut recently, and going ahead, if suppose there is another rate cut, the monsoon is better. Maybe at that point time we will look at auto, and now even the crude oil prices are also going up. That is also a bit of worry. So as of now we are neutral. We are not recommending.
Okay, a neutral stance coming in on the auto space. We have seen the regulatory woes as well been coming in, and that has really put a bit of pressure on the pharma space as a whole. Coupled with that, you have the overall valuation metric. A lot of these pharma companies quoting at very expensive valuations. What's your stand here?
So pharma, we are saying that if you look at pharma last 3 to 4 years, pharma has not performed. So maybe a little bit of catching up, and initially the rupee tailwind also helping, right? As of now, obviously that is not helping. But now they are getting into the complex molecules and other specialty drugs, which they were not doing other. And the pricing pressure in the US, which is earlier in double digit, has now come down to single digit and almost stabilized. So maybe that is going to help. And the leaders will continue to do well. But again, we are saying this is medium to long term. Maybe immediate short term, because of the rupee thing, there may not be a trading gain. But medium to long term, we are bullish on pharma sector.
Right. Arun, where else are you finding opportunities within the broader end of the market? Because, you know, from the last time that we stood at 11,400 to now, what one has seen is that there's been a broader market participation, is the mid and small caps as well. And quite a few of them which have actually recovered a good 40-50% from their year-to-date lows. Where within that spectrum do you find opportunities to invest in?
So if you go sector-wise, then obviously the first sector, we are always talking about consumer durable and FMCG. If you look at the results for the last 4 or 5 quarters, the double-digit growth and whatever name, whether you talk about HUL, Dabur, Jubilee and any other such company, even the electrification in different villages, in all the villages will help, and a lot of white goods also will do well. And because again we are saying that we are moving towards a $5 trillion economy, and there is a huge penetration scope, because there is a low penetration, whether you talk about air conditioners or refrigerators or whatever these kind of goods. So I think if there are good plays there in even the mid and small cap, and if the quality is good, this is the time to get in and start picking at a staggered level, because mid caps are still not come to that level where they were last year, maybe at January, February time. So yes, there are opportunities. So maybe we are advising either to get good picks, or maybe even get a good mutual fund mid-cap scheme. That is also one of the recommendation. But yes, there are opportunities available in mid and small cap at this point of time, because once a good election result come and a stable government is in place, the market is going to rally. Maybe this is the right time to go and accumulate those stories.
Arun, let's talk about a quick word on crude oil prices, and if we could potentially see a rise currently at about 67, which sectors could be impacted? Just a 30-second answer.
So obviously the crude oil is a worry because of Saudi going for a production cut, even if the US oil gas production has gone up, but because of this Venezuela and Iran problems or sanctions, the crude oil may play spoil sport. Obviously the aviation companies will suffer, oil marketing, maybe if there is a subsidiary burden, and wherever the crude is also used as a raw materials, all those sectors are going to suffer. So we are obviously, and obviously auto and auto ancillaries also will suffer. So I think these are the areas which we will be watching carefully, and there is definitely a genuine risk of crude price going up, and we are watchful, and as of now I think I will leave it here.
Arun, appreciate your time. Thanks much for joining in and giving us a view as to where you're seeing value in this market.